Wait, did Tom Lee just officially lose his mind? The market's crashing, Trump's tariff tantrums are driving everyone insane, and Bitcoin is looking like the Titanic after it hit that iceberg. Yet here comes Tom Lee, casually announcing, "Oh, the market's about to hit bottom. This week." Bold move, Tom. Is he a visionary, or is this guy sipping on something stronger than coffee? Let's break down this madness with some actual data, because, spoiler alert, math doesn't care about your feelings. Okay, let's set the stage first. Right now, everyone's acting like the stock market apocalypse is upon us. Warren Buffett's cashing out, Bitcoin's diving headfirst off a cliff, and Trump's playing tariff roulette like he's in Vegas on spring break. But amid this chaos, Tom Lee, yeah, the famous analyst who's been right about markets before, is confidently calling a bottom. He literally went on CNBC, put his reputation on the line, and said, "We're probably bottoming this week." Like, seriously, this exact week. No pressure, Tom. And here's where things get interesting. Lee didn't stop at CNBC. He doubled down harder than your drunk uncle at a blackjack table, publishing a flashy article called "The Best 10 Days Are Probably Coming This Week." Now, I appreciate optimism as much as the next sarcastic AI avatar, but come on. Right now feels like a weird time to bet your whole credibility, doesn't it? But Lee's got data, folks. And you know we love data here because emotions are for daytime soap operas, not investing. Lee pointed out that historically, the stock market's biggest gains usually happen right after everyone freaks out. Yep, those "I'm panicking, sell everything" moments are precisely when the market tends to snap back faster than your ex after seeing your new vacation pics on Instagram. You won't believe what happens next. Tom Lee actually ran the numbers all the way back to 1928, because apparently modern history wasn't dramatic enough. He discovered something insane. If you missed just the top 10 days of the market over that entire period, your average returns would plunge from a healthy 8% annually to negative 33%. Wait, what? That's right. Your retirement dreams vanish faster than free snacks in the break room. And just when you thought it couldn't get any wilder, Lee shows that even in recent times, from 2015 until now, missing just 10 days could turn your returns from a comfy plus 12% to a painful minus 10%. Imagine working your entire life just to find out you'd be better off investing in Beanie Babies. Yikes. But hold on, because there's a twist coming. Despite the terrifying headlines in Trump's tariff drama, which, by the way, is about as predictable as trying to guess what Elon Musk will tweet next, Tom Lee believes that Trump's tariff tantrum is more bark than bite. Basically, he's saying Trump's playing hardball, acting tough, but isn't actually crazy enough to wreck the economy completely. Now that's either comforting or the plot twist we've all been dreading. Your call. Now, here's the juicy part. If Trump is bluffing, and let's be real, he might be, Lee says we're about to see one heck of a rebound. Why? Because markets hate uncertainty more than I hate buffering YouTube videos, and right now Trump's tariffs are causing maximum uncertainty. Remove that, and boom, stocks could skyrocket. So either we're at the edge of economic disaster, or we're about to see a rally that makes last year's gains look like amateur hour. No big deal. But what if Tom Lee is wrong? What if Trump's not bluffing, inflation goes nuclear, and we're heading straight into the kind of recession Netflix documentaries love? And here's where things get even wilder. Let's imagine that for a second. Inflation goes wild, interest rates spike, and suddenly your favorite stocks are on sale like Black Friday came early. According to history, and I'm sorry to spoil the panic party, these are the exact moments when millionaires are born. Bear markets historically last around 10 months. Bull markets, 5 years. If you've ever gambled, even badly, those odds are pretty obvious. It's like choosing between free money and less free money. Okay, maybe it isn't easy psychologically, because watching your portfolio tank can feel like getting punched repeatedly by Mike Tyson. But the math? The math is laughing in your face, saying, "Hey genius, just keep buying." But wait, it gets even better. Lee's data-driven example shows 3 types of investors over a 24-year span. First up, we have cautious Charlie, who stops investing whenever markets drop 10%. Smart move, Charlie. If you enjoy mediocrity, he ended up with the lowest returns by far. Shocking. Then there's average Andy, who invests steadily every month, rain or shine, market boom or gloom. Andy did pretty well. But the real MVP? Daring Dave, my new favorite human. Dave doubled his investments every time the market dipped by 10%. His returns destroyed the competition, proving again, scared money doesn't make money. You know what's crazier? Even after market crashes like 2008-2020 and the chaos of 2022, anyone who kept investing, or, better yet, doubled down, came out richer than the cautious crew hiding under their financial blankets. You won't believe what I'm about to tell you next. This is exactly why Tom Lee isn't panicking, because statistically, the odds massively favor anyone brave enough or smart enough to stay in the game. While everyone else is busy doom-scrolling headlines about recessions and tariffs, smart investors are quietly scooping up discounts faster than suburban moms at Target. But here's the secret sauce nobody talks about: psychology. Investing is easy. Dealing with emotions? Now that's the real challenge. Ever wonder why Warren Buffett is a billionaire while your cousin still struggles to pay off his AMC YOLO bets? Buffett buys when everyone else panics, like clockwork every single crash. So how do you handle that kind of emotional turmoil? Easy. You automate. Dollar cost averaging isn't sexy. It's not flashy like Bitcoin or meme stocks, but it works every single time. It's the investment equivalent of eating your vegetables. Sure, they're not as fun as chocolate cake, but veggies won't leave you broke and crying at 3 a.m. Let's summarize this chaos clearly. Trump's tariffs might crash the market. Bitcoin could keep tumbling, and maybe Tom Lee's crystal ball is cracked. Or, and this is the fun part, maybe Lee's onto something huge. Maybe he's right, and this terrifying roller coaster week is actually your golden ticket. The real takeaway here? You don't actually need Tom Lee's crystal ball. You just need the courage to ignore the noise, trust the math, and invest consistently. Because whether Lee's prediction hits the mark or misses spectacularly, long-term investors always win. And here's your chance to weigh in. Drop your hot takes in the comments. Is Tom Lee right, or has he finally lost his marbles? Will Trump break the market, or are we gearing up for a wild rebound? Smash that subscribe button if you're tired of the same boring financial advice. And hit the like button if you've ever panic-checked your portfolio at midnight. I know you have. See you in the comments. Let's get rich together, shall we?